really pleased to be here. We have a distinguished panel today. Just before we start, I just want to get a show of hands. Who is familiar with blockchain technology? Looks like about 95%. Who is either an issuer raising capital, any form of capital, and or works in the capital markets at some capacity? Finally, who is familiar with initial coin offerings, or otherwise ICOs, or security token offerings, otherwise known as STOs? Okay, fantastic. All right, we're all on the same page, on the same level. Welcome, everyone. We're going to be talking about security token offerings, initial coin offerings, and their impact on global markets. Before I start, I'd like to have everyone introduce themselves on the panel. You can do it in 30 seconds or less. I will also ask you if you can limit your answers to 2 minutes or less. We'll start with Chris. Chris Hauser.
Chris Hauser, co-founder of Polymath. Polymath's a platform to help companies create tokens on the blockchain. And so we want to get them in the ecosystem. They tokenize their assets, and maybe at some point in the future, they can go and raise money through a security token offering. And that's really the essence of what Polymath does.
I'm Richard Carlton, the CEO of the Canadian Securities Exchange. I suppose I represent the taxi industry and the conventional hotel industry here in the face of Uber and Airbnb. So I'm the angry old man that's going to try and appropriate this way cool technology for the benefit of everybody.
Rob Richards, co-founder of Plaza Ventures. We're an early growth stage VC in Toronto for the last decade, and we're also housed with a major real estate organization. So we're going to launch Condo 3.0 next May, turning the condo industry upside down with a new model based on security tokens.
Thanks.
Sorry, I'm just fielding a phone call there. Rob Young, I'm a research analyst for Canaccord Genuity. I'm responsible for Canadian technology equities primarily, but Canaccord's a large independent investment bank. And we typically see ourselves as a more innovative investment bank. We like to be at the early stages of capital formation and new emerging industries, and of course new ways to raise that money. So that's our interest in this space, but I guess I'm sort of halfway between. I'm another angry old man representing the traditional way of raising capital, but we're looking for ways to participate in what's emerging here.
Jay Waterman, I'm the CTO of BlockStation. We operate an end-to-end platform for the listing, trading, clearing, settlement, and safe custody of blockchain tokens. And we work with stock exchanges and their entire ecosystem to enable them to trade these tokens.
Okay, thank you very much. So we have 3 broad questions relating to ICOs, IPOs, and STOs. The first question will be, what are some of the key differences and features of security token offerings compared to initial coin offerings, which are ICOs? Start with Chris.
I think there's really been 3 waves of funding on the blockchain. It started off with ICOs, where there was no verification of who the investors were. It was simply send your ether to an address. In return, you will get back these tokens. These tokens aren't backed by anything. They don't represent equity in any company. They're simply a means to use this platform on the chain. So that was phase 1, or wave 1. The second was, it was the same end result. You'd get these tokens that didn't necessarily represent anything, but companies started to wisen up and realize they had to do KYC and AML and verify who they were trading or exchanging these tokens with. And again, I think we've seen that both of those sets of tokens have gone down in value significantly in 2018. And what's coming to the forefront now is security tokens. And these tokens actually represent assets, equity in a company, property, or another form of financial product that's coming to the blockchain. And there's a whole set of regulations for those assets and who can buy, who can sell, trade them. And that's really what's coming in 2019 and the future is security tokens.
And I think to build on Chris's point, a lot of these questions actually aren't really questions. We have, in fact, a very well-defined, well-organized method for issuing securities in this market, either through broad distributions, which would be the initial public offering in which you file a prospectus and describe all of the risks and provide financial information and so on, or some kind of private placement where you have to market those securities, because that is what they are. to individuals who are accredited investors and otherwise exempt from having to purchase under the force of a prospectus. So what we're going to see are more and more structures from the conventional exchanges to list these instruments and to provide primary and secondary trading facilities for these tokens.
But we've been longtime buyers of asset-backed securities, basically shares in companies. And as a VC, I've never handed an entrepreneur a blank check with no governance, and that's basically what the first wave, and even the second wave of ICOs were. Absolutely no governance, no board, no voting. So we're very interested in seeing a new form of digital security come to market that may be backed by real assets like real estate or art or who knows what, but also buy shares in a company. So I think it's kind of the next wave of the way the companies will sell their equity.
So the difference between an ICO and an STO, I think the primary, it's been said a couple times here, but it's the regulatory framework. It respects the regulatory framework. It's in a new way. There's also a, like Rob just said, an ICO didn't give an investor, it's not really an investor, the right to a unit, pro rata unit of ownership of the underlying asset. It didn't give you a right to the profits. It didn't give you the right to stand up and say, this is how I want the direction of the company to go. An STO has a framework that's going to bring some of the IPO landscape towards the broader software-enabled ICO framework.
Awesome. I'm going to do an example to demonstrate the difference between an ICO and STO, just to kind of try to make something vivid stick in your mind. Could I get Riza, and could I get another volunteer yourself? Thanks. Awesome. You stay on that side.
That's right.
All right, so Riza is going to represent the ICO world. And your name? Anthony is going to represent the STO world, okay? And first of all, give them a round of applause for embarrassing themselves.
There's supposed to be a black hat.
It's a black mask.
All right.
The incompetence of ICOs.
Yeah. So first of all, just when you look at it, at the outset of it, basically, when you're dealing with an ICO, you don't necessarily know who you're dealing with. Whereas when you're dealing with the STO, you're dealing with regulated institutions, trusted parties, etc. So just when I say ICO or STO, I want you guys to shout back out which one would you rather invest in, ICO or STO?
STO.
Okay. All right. So the second thing is the level of disclosure. Okay. So when we're dealing with ICO, we have a small level of disclosure. This is the kind of disclosure you may get with the STO. With the ICO, the STO, you'll have potentially prospectus level disclosure. Okay, so you could have information on the directors, police background checks, full business plan, understanding of the risks and the rewards. Okay, so would you rather go with the ICO or STO?
STO.
All right. And finally, the third main point I would say the difference between them is where are they going to be traded, okay? An ICO, because it's lacking a lot of regulations and rules, it can only be traded in markets like crypto exchanges that are not really regulated, whereas with an STO, these are going to be eventually traded on the stock exchange like the CSE. So what would you rather trade at? Would you rather trade with the ICO or the STO?
STO.
Thank you.
Poor guy.
James gave you very clear that you need 3 Ps, pen, paper, and a pulse to listen to an ICO, so thank you for that. Moving on to the next question, which is really just a slight variation. What are some key differences in features of security token offerings compared to initial public offerings? We'll start with Chris.
I think Jay just explained that very well. With ICOs, there's little disclosure. There's people write a white paper with basically an idea, and they say, give us money, in return you'll get the token. With STOs, yeah, there's full business plans, financial disclosures, and a whole set of documents for people to analyze to decide if they want to invest in a product. So that's really the main difference. And then on top of all that is the regulations surrounding who is able to invest in the STOs, whereas ICOs, it's basically a free-for-all that anyone can invest in them or purchase them if they so choose.
And I think one of the really exciting things about the security token is all of the different problems with the conventional securities that the technology attacks. So what we're hearing from entrepreneurs is wanting to take deals that are currently done in a private equity setting. So whether they're real estate structures, intellectual property portfolios, streaming royalties from mines and oil and gas production. There's an awful lot of friction in the present system managing the payments that flow from these underlying assets. And what that's done is it's taken those assets out of the public equity markets and into the private equity world. What we're hoping to do is basically, through the power of the security token, bring that back into the public market, improve in effect, the pricing that the asset owner can get by a significant amount, so they can, in effect, raise more money for the same asset than they could in the private equity setting, and be able to take advantage of, as I say, the power of the blockchain to eliminate the costs and the friction. And of course, the final point is, it will present a whole new range of really interesting, largely income-based products for Canadian public equity investors. Because, to be blunt, the Canadian equity market hasn't been a very exciting place, absent the cannabis space, which of course I love and talk about 15 times a week. But the rest of it has been kind of a wasteland, not really very interesting or compelling. And as I say, we're really looking to unleash the ingenuity and the talent that people can bring to inventing these, in fact, new products for investors.
Richard, to follow on your points about friction, the current IPO market is hard to get into. You have to have a brokerage account, you got to trade against algorithmic traders. And so if I'm a guy in Kazakhstan with $100 and I want to invest in a US-based equity, I simply can't do it.
That's right.
Whereas the STO marketplace promises that global access and fractional purchase and 24/7 trading. So I think it's just going to increase the liquidity, increase the number of equities that come to market as the regulatory framework gets launched.
Okay, I'll hit on two things I think are pretty interesting. One would be the ability to take a very illiquid asset like a very valuable car or a piece of art and break it into a million pieces so that a million investors can participate in one of the best performing asset classes over this last couple of years. One of the best asset classes has been classic cars, but unless you have a few $1 million or tens of millions of dollars, you can't get into some of that market. An STO could take that illiquid asset and turn it into a liquid asset. Very interesting opportunity for investors. The second thing I would highlight that's very interesting is the ability to break away project financing off of a larger entity. It may be a case like a large gold company that has a mine that investors really don't like, and there may be an opportunity to break that project off and fund it through a security token offering. Another really interesting, pharma companies, which there are drugs that they want to fund R&D to build, but it's a Boolean investment. It's either works out or it doesn't. That may not be palatable for the investor in the large blue chip pharma company. Perhaps they can use an STO to break that opportunity off, to give the higher risk investment to a more appropriate audience. So there's a lot of really interesting ways that can broaden the current way that we primarily invest companies, through IPOs, and that's still a very vibrant market. I mean, in the news, you have Uber is going to finance itself next year, Lyft, WeWork. There's a lot of opportunity in 2019. A lot of companies are saying they're going to go public, notwithstanding how the markets turn out. And so this is taking a clunky process which has long settlement times and barriers to entry, and it's going to put it on top of software, which could make some of those things go away, and it's going to give the opportunity to build a platform. Just like the internet was created, you're going to get a lot of new entrants who are going to be able to innovate and create products that we can only guess at right now. And so it's bringing software into the funding environment, which I think is really exciting.
Jay.
Well, as you said, the software is the key, and what we're able to do is we're able to utilize smart contracts on the blockchain in order to automate and streamline these processes. So I'll just do a comparison again. For example, with an IPO, you may be able to buy into equities, right? And in terms of compliance, let's say you had an insider what we could do on the blockchain or the STO side is we could actually mark all of those addresses, which becomes very transparent. So if there was insider trading, we could see right away, right? And so we could protect our assets by, selling along with the insiders. Versus at IPO, we would hear about it a couple months later after the guy goes to jail. So from that perspective, would you rather go IPO or STO?
STO.
Right. So another thing, for example, you guys got to remember this. Another thing, for example, is let's say, so insider trading was one. We have additional compliance rules that we can build into the token. So for example, sometimes shares are supposed to be locked up for a while, but they slip through the cracks. Yeah. On an STO side, we could actually program into that wallet that these shares are not going to be released until a certain date, right? So we don't have additional shares flooding the market or doing something that's going to risk your guys' investment. So again, would you rather have an IPO or a STO?
STO.
I'm going to try that again. IPO or STO?
STO.
All right. And finally, one of the things as some of my panelists mentioned was, the fractionizing of assets. So imagine instead of buying an entire unit, let's say you're buying a building, right? Maybe you're buying a condo unit that you want to invest in. And you have to wait until a certain phase in order to sell it, so there's no liquidity, right? What if you could buy and sell it and go in and out of that market as you please, right? So it becomes liquid. So again, the flexibility with the blockchain tokens there's a lot more strength and flexibility.
Thanks, Jane. So it's not news to anyone in this room or audience that the ICO market has really taken a hit in the last year. I believe about 95% or more of all initial coin offerings are below their issue price. And I believe the last time I checked the data, there were about 2,300 altcoins. I read a stat the other day, there could be as much as 18,000 if you include coins that were not active at all, no liquidity, etc. So it's a very commoditized space, which leads me to my last question for the panelists, which is, in light of that, looking forward to 2019, can you describe some broad market trends and the implications of those trends, and what products do you expect to see, or what predictions do you have, I should say, in 2019 with respect to initial coin offerings, security token offerings, and even initial public offerings? We'll start with Chris.
I think what's happened in 2018 is, given the decline in all these prices, it's washing out a lot of speculators, and now it's giving the people, the companies who are actually trying to build products on the blockchain, it's giving them the ability to really just focus on that development, and it's limiting sort of the speculation, and we're building a lot of products that will be very beneficial in the coming years, and especially for all us on the panel, that's related to security tokens. And both Robert and Jay were sort of getting at what I see as the real benefits of security tokens. It's liquidity, and it's not really necessarily liquidity for public companies and IPOs. I see the real benefit as liquidity for private offerings. Right now there's premiums on private offering trades, there's complex rules that need to be followed, and if all those rules can be automated and written into the code itself, and the code can automate who's able to buy, who's able to sell, do you need to be accredited, can there only be a maximum of 2,000 investors, mark the affiliates, mark the insiders, and the code itself will restrict trading. I think that will lower the premium on those types of trades. And it'll also be good for the regulators. The regulators now don't have to look at stuff 2 months later, 3 months later, and investigate what happened. The investigation is all automated on the blockchain. And now these companies and the public themselves, or the traders of those securities, can be comforted that all the trades, provided the code is written correctly, are done in a compliant manner. So I see that as really what's being built out in 2019 and going forward.
Yeah, and I think Chris is exactly right. The actual developments, tangible developments, will largely be on the private side in 2019. I think the reality of, again, the taxi industry and the hotel industry that I represent against the saucy new entrants is basically that the plumbing that we've got to work with and that we have to replace at this point is really old, but it's embedded very deeply within the payment systems and the client management systems and the regulations. And this isn't just a Canadian issue, this is really around the world. So for example, the Australians, who are going on a full blockchain system to clear and settle all debt, equity, and foreign exchange transactions in Australia, they have no paper in the system. They got rid of it 25 years ago. So it's just a case of bringing the dealers and the exchange along. It's still going to be a 3 to 4 year transition period from the conventional system to real-time clearing and settlement, elimination of capital reserves, end of the credit ring, and all of that stuff that you don't need to know about, but it actually makes the securities industry function. So you will see the folks like me make significant progress and hopefully launch before the end of next year. But again, it's going to take a lot of time before the entire public equities market is over into this new technology.
Agreed. And so I'll talk about private innovation in 2019 because I do think that that's what we're going to see. We ourselves at Plaza again are launching Condo 3.0. You'll be able to see the website around the end of first quarter. Public launch sometime in second quarter, May, June. And we're taking the idea of bringing liquidity into an illiquid asset class, which is condominiums. It's a 5.5-year hold, typically on development. And you have all the hassles. If you want to be an investor, you have to buy a specific unit, you have to manage that investment. If you want to keep it, you got to hire a property manager. It's very, very full of friction, the entire process. And we have an affordability crisis. Millennials and Gen Zs have no idea how they're ever going to get into the home ownership game. They're renters. That investment class is passing them by. Prices are rising. They're more and more despondent every month, every quarter. So we're going to solve for all that. And we're going to create a model whereby the entry point for a would-be owner tenant is very, very low. And we'll supplant that with private capital that will be able to come into the ecosystem because of the access and the transparency afforded by the STOs.
Okay, so as a technology analyst for a number of years, I've seen a lot of hockey sticks and a lot of expectations. The one thing I think that always seems to bear truth is that we always assume things are going to happen faster than they will. We always underestimate the eventual impact. And so as I stand here in 2018, I think that 10, 20 years from now, I think it's ridiculous to think that the way that we raise capital will not change. I just am cautious on the pace. I think that we'll see the beginnings of STO as a way to raise money. I think that 2019, we're still going to lean on the IPO. Most of the money that's going to be raised is still going to be through traditional means, and they're going to be transacted through traditional means. And that's because of regulatory factors. I mean, one of the things, when I'm arguing to investors that they should pay attention to this space, and absolutely, Canaccord Genuity is very interested in this space. We have a dedicated team out of New York that's looking at ways to participate in this. We're an active participant. But when I look at 2019, the bulk of the money is going to be running through traditional funding mechanisms, and that's where the bulk of, I would expect, Canaccord's activity to be. That said, there's going to be opportunities along the way, like what Robert just described. This is, I always think of the Perez cycle when I'm thinking of this type of business formation, which is an interesting piece of analysis. It's famous. It basically says that there's two pieces of any new technology. There's a first cycle where the rails are laid. When the railroads were put in place, when the roads were built for autos, when the internet was built. I worked at Nortel for a number of years, and I participated in the rollout of all the optical networks. And then everything blew up. And invariably there's an infrastructure build, and then there's a bubble, and then there's a sustained period of application development. And I'm hopeful that that's what we're going to start to see in 2019, 2020, 2021, is a lot of applications and a lot of new ways to raise and transact capital built on top of the rails that we've built with Bitcoin and Ethereum and others. And don't lose sight of the fact that Ethereum, despite the fact that it's been, the pricing of Ether has been crushed, it is an ICO. It was raised through an ICO, and so there are successful businesses that are likely to continue on ICO, although that funding mechanism, I think, will die out in 2019 simply because of the weight of regulatory factors.
Okay.
Yeah, I believe that 2019 is the year of the STOs, and this is where STOs are really going to emerge and come into the public's light. And the reason is because you've got stock exchanges all over the world that are ramping up and trying to prepare to be able to list and trading these STOs. And I look at the stock exchanges as the center of the financial system. And so, you know, with BlockStation, that's why what we're doing is helping, you know, the stock exchanges, depositories, brokers, etc., put in place all of their technology with a turnkey system, so they don't have to wait 4 years or 10 years later. They can actually turn on a switch right away. So this is the reason why I think that it's going to be really quick. It's going to be 2019 is going to be the year of the STOs, and we're going to see all of these different kind of asset classes come into play where they suddenly become liquid. They're live trading, and you know, the smaller investors can get into the bigger projects, which they could never previously touch, as well as you have that international attraction with the STOs, right? So I think you're going to have, you know, a lot of investors all over the world who are going to be kind of investing in different projects across the globe. So I think it's going to be a really exciting year for the STO.
Thank you, everyone. That wraps up. So just to summarize what our panel members have said is that we've gone from an ICO market of a white paper, open green, no business, raising a lot of capital, to a more sophisticated, maturing market, a gradually slowing maturing market called security token offerings, in addition to initial public offerings, where we're able to use technology via smart contracts, automate compliance via exchanges and via issuers, and also assist with lower global distribution channels via these instruments. I'd like to thank everyone on the panel for coming here and giving our insights and analysis, as well as everybody attending. Thank you very much.